You probably don't know these stocks exist. Your financial advisor hasn't mentioned them. Your friends aren't talking about them at dinner. And the financial news networks are too busy covering the same 5 mega-cap names to even notice. But right now, in June 2026, 3 stocks, all under $10 a share, are quietly building momentum that most retail investors are going to miss entirely. Until today, I'm going to show you 3 under-the-radar US listed stocks. It's all trading below $10 that have real revenue, real growth, and real reasons to be on your watch list right now. Finding genuine quality in the under $10 range is rare. Most low-priced stocks carry serious risks or broken business models, but these 3 are different. And by the end of this video, you'll understand exactly why smart money is paying attention. Let's go. Most people have never once typed this ticker into a search bar. But spine surgeons across the United States are using this company's technology every single day, and the growth numbers tell a story. Wall Street is only beginning to notice. Alphatec Holdings, ticker ATEC, makes the implants and surgical systems used in complex spinal procedures. Niche. Yes, but here's what nobody's talking about. The spine surgery market is exploding, and Alphatec is quietly taking market share. In Q1 2026 alone, Alphatec reported a 17% jump in surgical revenue and 14% total revenue growth, hitting $192 million for the quarter. Surgical case volume surged 21%, and the number of net new surgeon users rose 23%. When new surgeons join the platform, they become long-term recurring customers. That's a compounding growth engine hiding in plain sight. The company also locked in a new banking facility that slashes annual interest expenses by over $6 million. With debt pushed out to 2031 and they're guiding for full year 2026 revenue of around $882 million, reflecting 15% growth. Risk, not yet profitable on standard accounting measures, and healthcare reimbursement policy can shift. But the fundamentals here are moving in one clear direction, up. You think that's interesting? Wait until you hear about stock number 2, because this one is hiding in a sector most people completely write off. Nobody talks about this stock at a barbecue. Nobody posts about it on social media. But here's what I know. The best investments are often the ones that bore people at first glance. Aveanna Healthcare, ticker AVAH, provides in-home nursing care for medically fragile children and adults. Think of it as the bridge between a hospital and a family's living room. As America's population ages and healthcare costs push patients toward home-based care, the demand for exactly what Aveanna does is only growing. Now here's the part that made me do a double take. AVAH is currently trading at a 50% discount to its healthcare sector peers, and 33% below its own historical median valuation at just 10.5 times forward earnings. Half price. Compared to companies doing the same thing, the company just completed its acquisition of Family First Home Care. Earnings estimates for 2026 and 2027 have been revised upward by around 6%. And Aveanna is projected to grow adjusted earnings per share by 10% this year and 12% next year. Growing earnings, deeply discounted valuation. Under $5 a share. This is the kind of setup most investors only find out about after the price has already moved. The risk here is real. Thin margins and dependence on government reimbursement rates mean any policy change can sting. But at this valuation, the risk to reward looks compelling. And now, stock number 3. This one operates on the other side of the world, but the opportunity, it's as big as anything you'll find in the US market right now. You've probably never opened the Grab app. Most Americans haven't. But 51 million people across Southeast Asia open it every single month to get a ride, order food, send money, and pay their bills. Grab Holdings, ticker GRAB, is the super app of Southeast Asia. Imagine Uber, DoorDash, and your bank all merged into a single app. That's Grab. And the numbers right now are genuinely remarkable. Monthly transacting users grew 16% year over year to 51.6 million. Revenue surged 24% in the first quarter of 2026. Grab's strongest growth in 2 years, with earnings growing even faster than revenue. So why is it still under $5? The stock has been cut nearly in half since peaking last fall, even as the business underneath keeps getting stronger. That's the disconnect. That's the opportunity. At around 24 times next year's expected earnings. Grab is trading at a fair price for a company growing above 20% with accelerating profitability. Risk, and this one is real. Grab operates across multiple emerging market countries, which means currency swings, political uncertainty, and regulatory risk are all part of the equation. It's not for the most cautious investors. But if you believe Southeast Asia's digital economy is still early in its story, there's a strong case to make for this one. Here's what ties all three of these together and why I think this matters more than people realize. Every single major sector of the U.S. economy is projected to grow earnings in 2026. This is a broad expansion, and in environments like this, overlooked, underpriced companies tend to get rediscovered. That's exactly the setup we have with Alphatec, Aveanna, and Grab. You didn't hear about them on the evening news. You won't see them on the trending tickers. But that's precisely the point. The best time to learn about an opportunity is before everyone else does. Let's bring it home. Alphatec, a spine surgery platform with explosive surgeon adoption, under $10. Aveanna, an undervalued healthcare company growing earnings double digits, under $10. Grab, Southeast Asia's super app growing 24% and still near its lows. 3 stocks, all under $10. All with catalysts most investors don't know about yet. As always, nothing I say here is financial advice. Do your research, know your risk tolerance, and never put in more than you can afford to lose. The market can humble anyone. But if you want to keep getting breakdowns like this, stocks that most people won't hear about until it's too late, subscribe and turn on notifications. And drop a comment right now. Which of these three are you looking into first? Let's talk about it. See you in the next one.